Hello and welcome to another update video about the S&P 500. Would like to focus only on the shorter time frame here today. We haven't covered the S&P 500 for a while here in public. We do publish videos every single day for our Patreon members. So if you are interested in daily updates about the S&P 500, feel free to check out the link to the MCO Stocks and S&P 500 service in the description. Reason I do this today is obviously we had CPI data release. I don't normally follow that too much because essentially it often simply is a catalyst for something that's due to happen anyway, and it typically just leads to some volatility. Now we've had quite a substantial gap down today. The markets are red, crypto markets, gold. Yeah, I think I need to check the other asset classes. I think gold is down. Doesn't matter. I need to check the other asset classes. There's a little bit of volatility today. Inflation was a little higher than the market, I think, expected, and we've had that gap to the downside. The reason I make this video is to indicate where the support levels are and where the current resistance level is and what we are watching for right now. I don't have a very accurate micro count of the decline. In parallel, I do follow the ES chart, ES futures, which shows us a micro count. Sometimes it makes sense to follow them both because you can't really do a proper micro count with a gap down. That's why when looking at an index, it is worth to watch, for example, the ES futures as well, or some other tickers that basically mirror the S&P 500 index. But looking here at the SPX chart, we've had a pretty full move to the upside. I've actually run out of wave degrees. This is the update, or one of the updates that I basically sent out yesterday to members, and it showed basically this upside count. And yeah, I apologize that the wave degrees are sort of mixed, but I was really running out of wave degrees, and I did want to avoid to increase the wave degrees of the largest degrees, because then you end up confusing everybody. So I just labeled it like this yesterday late, just after midnight, because it showed that we had a pretty full count, and we had at the time a 3-wave decline, but the ES chart already showed a 5-wave decline. That was for us the warning, or for me the warning, to highlight that probably we've started a more substantial decline, but it would take a break below micro support to confirm. That micro support was around, I would need to look it up again, it was 4,980. But we also saw the decline obviously on the ES chart. So my initial idea was that on the ES chart, the futures, because we had already late yesterday 5 waves down, we would see a little bit of a corrective rally and then a continuation of the decline. That corrective rally would have confirmed basically so obviously staying below yesterday's high would have confirmed this corrective rally and could have then taken us down further basically. But the market has chosen to take the direct route. So really what you can only do is to highlight, okay, upside wave count is full. That doesn't mean we have to reverse, but it means, okay, we have to be watching, be on the side of caution. Yeah, be on the side of caution, guys. But what we need to see is then a break of micro support next to confirm. It always depends on how much confirmation a trader needs to be able to make a decision. Certainly the risk was high up there. And then obviously, yeah, break of micro support, that's what I'm watching for, and a 5-wave move down. Now, because the close we have daily close on the spot market, so the S&P index sometimes doesn't give us all the information. The ES futures on the smaller time frame showed us 5 waves down. It's just that we didn't really get a corrective bounce. It just sold off directly. Still though, confirming the bigger picture idea, and the upside wave count, which was pretty full, showed us 3 waves up, and now we are likely in this 4th wave. I currently see the decline as the A wave of a larger 4th wave. I'm labeling that as circle wave 4. My support region is between 4,925 and 4,790. In the primary scenario, I'd like to see the market develop a clear ABC structure. The direct pathway of a correction is always uncertain. Corrections are characterized by frequent relabeling and everything. That's okay. It's not about predicting the exact pathway of a correction. It's about identifying what would give us a clear setup. For example, a short trade setup would only be given, which is clear, if we get, for example, a corrective rally in a B wave, and then that C wave down could be the short trade. But it needs to show. It's not always clear. I cannot rule out that it's doing the wave 4 more directly, but a wave 4 is typically a bit of a sideways correction. So we have to keep an open mind in corrections. But the bottom line is the break of micro support confirms the idea that a larger pullback has unfolded. And first of all, I'm going to explore the idea that this is a wave 4, and not yet a more substantial decline, even though I've been warning about that, but I don't think so yet. Seems still incomplete to the upside. So I'm watching here for a fourth wave, which, as I said, ideally completes the A wave shortly, maybe today, tomorrow. Then we should get a B wave corrective rally and a C wave to the downside. Ideal target for a fourth wave, for a C wave in this wave 4. I mean, we can calculate the C wave target more precisely once we have the B wave top in place. But normally what you're looking for is sort of, a wave 4 of the previous wave degree. So I'm looking here at round about 4,840, 4,850. It's also the 38.2 retracement, which is an ideal target generally for a fourth wave. Ideal target for the A wave would be the 23.6 Fibonacci retracement of the third wave. So it's at 4,925. Not super reliable, but also where we had previous structural support. So I'm watching that as a potential support level. Then I'm going to watch at some point from this region, maybe we could get a few squiggles lower. I'm watching for a B wave corrective rally, not started yet, at least no evidence for it. And at the moment, based on what I see right now, but this has to be adjusted if we go a little lower, I can only offer a standard resistance area between the 50% Fib level and the 78.6 Fib level. B waves can overshoot, be aware of that. So it's not like a hard ceiling or something. It's rather flexible. B waves can overshoot, which often happens also in a fourth wave, so especially in bullish markets. But I'm watching still for a corrective rally. Want to see how we react to these Fibonacci levels there. And if there is a clearly corrective rally, the blue wave count with that decline in wave C would be confirmed further. For now, we keep an open mind as to how this correction exactly could develop. The parameters are fairly clear. A break below 4,790 would open the door to a more bearish interpretation, which I see currently only as the alternative perspective. Not unlikely, but I don't think we're there yet. I would like to see it just form at the moment a fourth wave, which should be guided by the parameters on the chart. So I keep you updated. If you're interested in daily updates about the S&P 500, as I said, feel free to check out our stocks and S&P 500 service. We also cover stocks there, but the S&P is covered sometimes intraday, but every day at least with a video and a written update at the end of the day. And hope you enjoyed the update. Thank you very much. Have a great day. Bye-bye.